Hey guys, it's Jessica Stone at Stansberry Research, and I'm here with Brian Tycangco of True Wealth Opportunities China. And we are hearing increasingly so much on the campaign trail, Brian, about decoupling. I'm going to play right now a soundbite for you from President Trump talking about the imminent and need, as well as the pledge to decouple from China in terms of American supply chains. Listen.
Under my administration, we will make America into the manufacturing superpower of the world, and we'll end our reliance on China once and for all. Whether it's decoupling or putting in massive tariffs like I've been doing already, we're going to end our reliance on China because we can't rely on China.
So, Brian, he is promising decoupling from China, moving manufacturing back to the United States, penalizing American companies that manufacture and send jobs overseas. This is like the 2016 playbook all over again. That's the political point. But what is the economic point here? The cost of cutting or divorcing from Chinese supply chains is something that we continue to talk about. What do you think consumers and investors need to keep in mind about how it impacts them and their choices if we really are going to pursue this path?
A lot of this really plays out in the semiconductor field, wherein China imports most of its semiconductors from overseas, a lot of it from the U.S. And most of the decoupling fears is centered around technology. But then if you really look hard into the numbers, it's sort of like a mutually assured destruction if you think about it, because U.S. semiconductors companies sell more than a third of their, or realize more than a third of their revenues by selling to China. So you're basically saying, let's decouple, and you should say goodbye to 1/3 of your revenues and probably face losses for the foreseeable future. I mean, you get a company that you knock off 1/3 of your sales, you're probably going to go into the red for a very, very long time.
So every time we hear the president or another public official in the United States promise decoupling, how do the markets respond, specifically in semiconductors? Do we see a dip, or are they just used to this rhetoric and not taking it seriously any longer?
I think it's more of the latter. I think people are really waking up to the reality that this is going to be very hard to fulfill. Whenever President Trump comes out with a new tweet that's very inflammatory, the market kind of has a knee-jerk reaction, but then comes back to reality and says, hey, this is going to be difficult to implement. Maybe we're going to go there sometime in the future, but not right away. This has a long way to play out, and it's going to give investors some time to figure out what to do next. And most of that really has to do with finding which companies stand to benefit from a gradual shift in dependency towards the U.S. semiconductor supply chain when it comes to China. And China has been throwing a lot of money into developing its own chip industry.
So back to your earlier point, you said finding out how a gradual shift in the semiconductor field would affect the supply chain. So what are some of the things to look at with respect to that?
So I would be looking at other companies that may be able to supply China, because that demand is not going anywhere. I would also look into their own chip industry. Right now it seems pretty battered. But then, like I mentioned previously, China has the volume, basically the scale, and you need scale when you're making chips. You spend billions of dollars to create a new kind of chip, but then you cannot just sell high-end chips. You need to be able to sell these chips later on as it ages to a much bigger market, and that much bigger market, lo and behold, is in China. It's got, it sells how many? Almost 500 million smartphones a year. So
I want to raise a point that you should be in a good position to assess, which is that a lot more South Asian and Southeast Asian countries that are in a position to be part of China's supply chain are also part of China's sphere of influence and are potentially more likely to try to fill that gap. Are there companies that you know about in Southeast Asia, as you're really starting to follow emerging markets for the portfolio, that you're looking at as potential investment opportunities because you see the need coming?
Well, most of these, when it comes to chips, really, we're talking about Taiwan. Taiwan really has the bulk of it. You might have some in Singapore. So these would be places that you would look. Singapore has huge investments in China. I think I read today that the Temasek, one of the largest government-backed investment companies of Singapore, has most of its investments now in China. And Singapore, having so much vested interest in seeing China succeed, will obviously want to be able to find ways to supply China with advanced technology as well. And it's sort of like, in the middle of all this geopolitical tension. I mean, it's not in the same boat as Taiwan, wherein they really don't want, politically, they don't want to be seen aligned with China.
Yeah.
Singapore is sort of like the middle ground. So I think so Singapore may be a place where there would be some opportunities when it comes to supplying China. Taiwan, you have TSMC, you have MediaTek. These are some of the greatest companies to come out of the semiconductor industry, especially TSMC. I mean, that's like the big kahuna there.
Thanks so much, Brian Tycangco there with True Wealth Opportunities China. We thank you for your time. And if you would like to be connected directly to his True Wealth Opportunities China, just hover on your screen. We'll connect you now. We're also on YouTube, Facebook, Instagram, LinkedIn, and Twitter. Thanks for watching. That's all for now.